the substrate. Great. This stuff is downloadable also, right? I think that thing that comes, that is downloadable as well. Okay. So fine, we are sharing the screen. You can see this. Okay. So this is just okay when yeah, best book on investing according to Buffett. Just a point here. This does not require a stratospheric IQ. Okay. So this is one thing that this is a related point I want to make here is that, you know, a lot of the time people say that in order to do finance, you have to have like very high level of maths and all that. That's not correct at all. Okay. So you can see Buffett himself is confirming that. And if you remember, I would have told you when you guys were doing lab that you don't need a very high level of maths. What you really need is interest in the subject. If you're not interested in the subject, then you'll find it boring and there's a lot of work to be done. You cannot do that amount of work unless you're interested in it. It's not humanly possible. That's why we always tell people to choose your profession and choose something which you enjoy doing, which doesn't feel like work. Because if you choose something that you don't enjoy, you just cannot afford to put in the amount of effort that is required to achieve excellence. Okay, remember what Edison said, that excellence, genius is 99% perspiration. So to achieve excellence in any field, you will need to put in an enormous amount of effort, and that's not going to be possible unless you're interested. So therefore, what I say here in relation to this point, okay. So and then the other tick that the other pattern that I'm going to follow is, you know, in the past I would have written down a lot of this stuff as I'm talking, but that would slow me down. Since the recording is going to be available, okay. So make use of the recording and follow the text along with the recording. That way you can learn. You know, that way I can actually give you more tips or more of my comments on the book, and at the same time we're able to move faster and we're able to cover more material. All right. So what you need is a sound intellectual framework, obviously logical thinking and all that. But the main point, forget about you know, having to have a high level of mathematical sophistication. You don't need calculus. I can tell you that, having you know, been a financial professional for more than 20 years, and I have continued to trade even in academia. You don't need to have, you don't need calculus, but some algebra is good actually. It's good to have some command over algebra, but that's just basic class 12 algebra is good enough. If you have that much, that's good enough actually for finance. So this is very important, okay? Discipline is very important. Let me make a note here, okay? Emotional discipline is a very, very important thing. So let me make this note. This is straight away coming on page 9. And this is where you're going to how I made the comments. Okay. All right. So the point I'm talking about is, okay, I'm going to be using all caps because it's just, I like to do that actually because it's so big. The letters are so big, it's easier for me to read. Okay. Emotional discipline. Here, what are we connecting to? I want you to read a book called The Disciplined Trader. Okay, I think you should be able to get pretty much every book I recommend to you. I think you just first search on the net. Okay, most of the stuff is available for free. Search here and there on PDF drive and all that. Okay, this is by a guy called Mark Douglas. I don't need to write by. By Mark Douglas. Okay, very important book. It tells you about the psychological aspects of trading and managing money. Trading, investing, managing risk, it's all the same. So when we say trader, okay, so please remember this word trader and emotional discipline investing. It's all the same. Any kind of financial markets related activity that you do, even if you're actually, let's say, a corporate treasurer trying to manage, you know, a capital raising decision for a company. So many people, you know, are raising money through debt, equity, etc. So if you're a treasurer, even then you'll have to time the market, and even that requires emotional discipline. So any kind of role, finance role involving the financial markets requires this discipline. And a very useful book to read is this one. Okay, so I'm not going to go too much into it, but it's an excellent book. I would strongly recommend everybody read this book. It will teach you a lot about this. So this connects to this emotional discipline. So now you see how this note is going to be used, and you are going, and like everything else I teach, I don't want students to waste their time taking notes. So the notes are all shared with you. Your job is to remember your job. Your job is to, you have two jobs as a student. I'll just remind you once again in case anyone has forgotten from lab. Your job number one is to pay attention. Okay. Number two is the moment you don't understand something, your job is to ask a question. Okay, then I'll explain it. Don't fall into that trap which we have. We have a cultural problem in this country because of the amount of pressure put on children to appear smart. That people don't want to ask questions because they think that if you ask questions, then that means you must be stupid, that you didn't understand, right? So, but we can see from first-hand experience in your batch that I think Soumya was one of the most active, people when it comes to asking questions, and she has done very well. She's the topper of the batch. So that means that somebody who's asking questions is not stupid. Okay, so get out of that mindset. But that's a mindset that Indian children have. Can't blame you for it. It's just societal aspect of our upbringing. So, but you be conscious of that. Be conscious of the social environment that you come from and the kind of problems it creates for you, and try to grow out of those problems. Okay. Don't make this mistake of not asking a question because people are going to think you're stupid. You're the one who's going to lose out. Okay. So you have to ask questions. So if you don't ask questions, then you don't learn. Okay? Remember, that's why you come to class. That's why we have, that's the only reason to come to class and attend a live class, because you get the privilege of asking questions. Because everything else nowadays, when we are sharing the recordings, pretty much everything else you can do. Why do you need to come to class? If you don't have any questions to ask, you can just study the lectures later on. This is also available. This lecture is also available. But the only advantage of coming to class is that you have the privilege of asking questions. Okay, you saw how many questions people like Soumya, Sushant, and all were asking in lab. Lots of questions. So that's the privilege. That's the only reason you come to class, to ask questions, because that helps you to understand the subject. Okay. All right. So let's go back to this emotional discipline. And so you'll see chapter 8. Many people in the investing business will refer to chapter 8 of this book. And but of course, we don't want to go straight to chapter 8. We'll go in sequence. Okay, I'm just going to scroll through. If anybody has any questions, when I feel that there's nothing for me to make a special remark on, like I spent some time doing talking about emotional discipline, don't need high level of math sophistication. So I'm going to make comments as we go along. But when I feel there's no need for me to make a comment, I'm just going to scroll through, okay? But if you feel there's something that you want to know, like, okay, what is this financial analyst journal or something like that, so then you ask the question. Otherwise, I'll just scroll through, okay? So you have to make it interactive, and don't follow it. This is basically this way. If we go like this, we can cover more material. That's the goal here. Okay, we want to cover as much material as possible, so that I can also give you tips like this. Okay, like this kind of tip, that extra learning opportunity. So this is the way we cover more material. Otherwise, if I sit here and ask, 10 people, oh, you read chapter 1, what do you think? Vartika, what do you think? Soumya, what do you think? I can ask like 15 people for their 15 opinions, and then I'll summarize. It's a total waste of time because we're not covering much material. Okay, so you've got to understand the style of, we're trying to follow this lecture tutorial style of teaching because it allows us to cover more material. And so, but you must be emotionally, you must be mature in this process, because if you just allow yourself to get bored, you don't have, I would say, you don't have the right to get bored, because you've joined as finance students. Okay, it's your responsibility to learn the things that I'm telling you need to learn. So I would say that, like your senior Utsav was telling me one day, that sometimes you used to get bored. I said, you don't have the right to get bored, because it's your job to master the concepts that I'm teaching you. So you don't even have the right to get bored. Okay, it's your duty to pay attention in the class and master the concepts that we are covering. Okay, I hope nobody's getting scared. You're already used to me from lab, so I don't think you're shocked by the way I'm talking to you. So please don't get nervous. It's all driven by the fact that I'm like your coach. So I'm not here to be nice to you. I'm here to make you into a more complete finance student. Okay, that's my job. So if I'm nice to you and I mollycoddle you, then I'm not doing my duty properly. So please understand where I'm coming from. Okay. All right. So let's go through this. Okay, if at any time any of you feel, now I'm teaching you in a certain way, right? If any of you feel there's a problem, you're not able to follow or something, please, talk to me at least after the class or something. Give me your feedback so that I know if the students are having, like, if you're having problems and you're not telling me, then I don't have an opportunity to respond and change the way I'm teaching in any way, right? So please tell me if you're having, because if you don't tell me, then I have no way of figuring out. Okay. So this is just general stuff. Okay. So you should know about this person, Ben Graham, who wrote this book. And this is all basically remembrances of Ben Graham. Okay, so this is another book which you have to read, Security Analysis, which obviously we can't cover too much, so I started with this. This is actually a little bit more technical, so this is a little more accessible, this book we're studying. So again, here you can see this is something you guys have to read, okay? You have to read this. This is part of your training as a finance student. So we're going to make you read the classic books. So you make sure you read the, obviously your first responsibility to discharge the course obligations. So take care of the course obligations first. Make sure you get a decent grade, because these days people judge people by their grades. But although I don't think that's very wise, but this is the world you live in. So don't mess up your grades unnecessarily. And then later on, people will judge you by those grades and it will become a problem. So just make sure you cover the course material properly. But down the road, maybe after you get a job or something, you make sure you cover this book. Okay. So this is suffering to the October 1987. So let me talk about this. You need to read about this a little bit as to what happened. Okay. Let's talk about page 7. What is he talking about? This particular incident that he's talking about. Um, that October, U.S. stock suffered their worst one-day crash in history. Okay, this is the 1987 stock market crash in the U.S. So this is what he's referring to. This was referred to as Black Monday. Let me just make this. So you can try to read up a little bit about this. You'll learn a little bit about how markets function. Yeah, October 87, stock market crash, known as Black Monday. Right. So another thing for you guys to investigate later on, read more on it, you'll learn more. And don't, the other thing that I have to clarify is this business of, see, we are studying this book, which is an investment classic, and obviously the references are all to US markets. And, but what you should do is, don't get worried about the fact that you're not studying Indian markets. That's not really a concern, because when you're studying finance, the proper way to study finance is with a focus on the US markets, because the concepts are all the same. And India is actually a financial backwater. We have not opened up our financial markets as much as we should have. So given the size of the economy, the financial markets are underdeveloped. So if you study finance with respect to Indian markets, you will not learn finance properly. You have to study US markets, which are the biggest and most liquid markets in the world. These are. So that's where you should focus, and you have to understand US markets in order to operate in the world of finance. So get out of this mentality that I want to learn about Indian markets. That also I will tell you, I've already given you tips, and I'll give you more tips on how to follow the US Indian markets. But this you should also understand US markets and the history of US markets, etc. So I'm just trying to get a chart up to see where if we have a chart of the Dow Jones Industrial Average all time for all time. I'm just trying to see that. So this is the worst stock market. This is the stock market crash in the US. We don't have that much data, but I'll just show it to you a little bit. Okay. This is where it is. Now, this is, we still don't have 1987 actually, but anyway, so you can actually just go here and check. There are some other charts that will actually give you that kind of a picture. See what happened in the US stock market in 1987. You can check that later, okay? So we will, I'm just putting this here. It may not appear over here, so I'm just putting it as a link. But anyway, that's your stock, the Yahoo Finance chart link. So you can investigate that. This is Black Monday, the stock market crash in 1987. So trading on margin, this is the term that he's using. Okay, so this is self-explanatory. I'm not putting a note for this. Borrowing money to trade stocks on margin. This is not there in India. Okay, so this is another thing that you don't learn, but this is one of the reasons why you do when you study finance based on the most developed markets, not on the Indian market. Because in India we have to buy everything on a fully funded basis. In the US, you can borrow money, so you can under the current regulations you can borrow. So if I'm buying $100 worth of stock, I can borrow $50 from the broker, and I can put up $50 on my own. Okay, so I can have 50% or 2:1 leverage on this, where like $100 is the total value of the stock and of the position, and my equity is only $50. Okay, so this is what is meant by trading on margin, where you have some element of borrowed money to finance the total position value. Let me make a note on that, page 12, so that you have a good understanding of what is meant by trading on margin. Okay. This is a general term. Trading on margin, you can apply that to any asset class, right? I can apply it to FX, to currencies, that is sometimes called FX. You can apply it to bonds. Trading on margin means that the general definition, okay? So I'll be writing some of this stuff here. Trader does not put up equity equal to 100% of position. I'm not writing perfect English here of the position value it should be, but I'm going to leave out the and all that, okay? Because we're not trying to save time. Trader does not put up equity equal to 100% of position value, which means something less than 100%. So understand this point. So if you buy here, what is happening? If you buy $100 worth of stock, then you put up a little bit. In the US current regulations is 50%. Okay, current US regulations 50%. Okay, so if you buy $100, so position value here is, let's say you bought a stock for $100. Position value is equal to 100. Okay, and equity is here. Equity is equal to 50. All right. So here what we say is the leverage multiple. That's another term that you can learn. The leverage multiple is 2. Okay, how do we get 2? Leverage multiple is position value divided by equity. Okay, so I bought stocks worth of $100. My equity is only $50, and the balance $50 I've taken a loan from the broker. This is called a margin loan. Okay, so the mother took money she borrowed money on margin to trade stocks, and she got wiped out in the crash of 1907. This is a common problem. Okay, people don't know what they're doing, and they don't understand how risky markets are and how unpredictable they are. So they just this is like kind of going into a battle without any training. Okay, so a lot of people get wiped out like this, or they lose a lot of money. So obviously don't do that. Position value. So we're learning a new concept called the leverage multiple. So leverage multiple is equal to, how do we define it? I'm using this opportunity. So you see how we are using the book to also teach you some related important concepts in finance. So this concept of trading on margin. Trading on margin is a general term, can be done for stocks, bonds, currencies, anywhere. Okay, and here you have gives us an opportunity to learn about an important concept, leverage multiple, sometimes called a leverage ratio. Just make sure how you're defining it. Okay, I'm just teaching you this term. Sometimes also people use this term called leverage ratio, in which case, you can also call it a ratio, because this is also a ratio, right? Anytime you have numerator, denominator, you can use the word ratio. But a multiple is better actually. Ratio, generally we want to use less than 1. So the fraction is less than 1. But so I prefer the word multiple, because it's always going to be more than 1. Whenever you have some kind of trading on margin going on, the position value is always going to be greater than the equity. Because what's the definition of trading on margin? Does not put up equity equal to 100%, something less than 100%. Okay? So right now in the US, you have basically 50% equity. So the leverage multiple is defined as position value divided by equity. All right. The general concept, you can apply it everywhere. You can apply it even in corporate finance. In corporate finance, okay, what would be the equivalent in corporate finance? Can anybody tell me? Anybody? Everybody is sleeping. Anybody wants to tell me anything? Yes? Happen. Now I have to call people by name. See, you guys have to behave in a more. I'm recording it. Yeah, okay, fine. I'm recording. I'm telling everybody that I'm recording the meeting. Yes, anybody? Let's ask Sanchit. You want to tell me what is the corporate finance equivalent of what we just did?
The corporate finance is something which sometimes corporate require finance for its functions or operations. So corporate finance.
No, I don't mean that. I understand what you're saying. I'm saying that in corporate finance, in the area of corporate finance, I just explained to you a concept called leverage multiple, right? I taught you a new concept,
Yes,
leverage
sir.
multiple. That can be applied for any case where you have position value divided by equity. Has everyone understood this?
Yes.
I'm assuming, right? No questions means you have understood. Please don't make the mistake of not asking
Sir,
questions. Yeah. Yes, Mike.
actually, I wanted to ask that in India also there is some level of leverage means that we can like there is margins I think provided like it's I think 2x so means if you are buying a stocks worth of 200 so there should be total value of 100 rupees in your uh, means portfolio or in your
That is
stock. So
pre-settlement, right? What you're talking about is pre-settlement. It is. Does it extend now beyond the settlement? It
yes.
is only before the settlement, right?
Okay, so
Am
means
I?
after T plus 2 days we have to settle that amount also.
Yeah. I mean, my understanding the last time I checked was that that what you're mentioning does not apply beyond the settlement date. Am I right? Or you have both? I mean, because I'm not trading US equity, I'm not trading Indian equities, so I would not have latest information on the regulations. But you understand what I'm saying, no? That
Yeah,
the flexibility that you're talking about, that does not. My understanding is that it does not extend beyond the settlement date, the T plus 2. Am I correct?
I will just check, sir. I'm also not sure.
Okay, check it. Check it. I mean, that was my understanding. I know that it was the case earlier. So, no, when I'm talking about the US markets and trading on margin, in the US markets, you are allowed to carry it beyond the settlement. That's the important point. You can carry it for months. You can carry it for 6 months, 9 months, 10 months, whatever you want to do. Okay. So, whereas in
And sir,
India, the
does it
rule,
entail any interest?
yes, yes, of course, you have to pay interest because you're taking loan. You're taking a loan for $50 here. So you pay, you pay the interest on $50, or whatever the broker will agree with you. So the broker is lending you money, just like a bank is lending you money. The broker is lending you money. So you'll have to check the on the broker's website. You'll have to check the loan rate of interest on margin loans. Got it?
So, sir,
Yes.
the
Yes, sir.
so, sir, the borrowing amount which we borrow from broker is a margin loan.
Correct. Correct. Very good. Correct. That is called the margin loan. So
Oh,
this, so Ben Graham's mother took a margin loan, and she took margin loans
okay.
to trade stocks, and then she was long stocks obviously, and then the market crashed, and then she got wiped out. Right?
Okay.
All right. So that's called a margin loan. So that you take this as part as the balance 50 is the margin loan. Okay. And okay, bank is also clear about whatever he asked at the moment, and you can go and check on that point which I made. Everybody understood what Bank was saying. Bank is saying that when I was saying there's no leverage allowed, no margin trading allowed on Indian markets, he's saying no, it's allowed, but that's actually my understanding is I could be wrong because I'm not following the latest news in terms of the regulation changes. But my understanding is that this trading on margin in US market, in Indian market, does not extend beyond the settlement date. Okay, so on T+2, if you do the transaction today, 2 days, 2 business days from today, you have to settle it. So you have to, if I buy 10,000 shares of Maruti, I will receive the 10,000 shares of Maruti in my demat account, and whatever the value of the transaction is, whatever it cost me, okay, maybe 45,000 rupees or whatever, I have to pay out that 45,000 rupees has to go out of my pocket. My bank account will be debited and the seller's bank account will be credited. So that's
True.
settlement, and that time you have to settle fully, and you can't take a loan for that. So I can't take like 45,000 rupees I have to pay. I'll take a loan for for 15,000 rupees. No, that's not allowed. That is my understanding as of a few months ago or something like that. So we can check that. Mayank will check that for us. And okay, so coming back, yeah. So Sanchit, you had anything more at this stage?
No, sir. No, sir. Just I am confirming about the margin loan part. I want to ask that only.
Yeah,
My
correct, correct. That's the term is correct. What you use is the right term. Okay,
yes,
right.
sir.
Now, what I want you to see, I'm trying to always connect I'm trying to always bring in the related concepts. Okay, whenever we study something, I try to bring in the related concepts. So that's why on trading on margin, the related concepts which are important in finance, I'm just bringing in all this because this is all that not there in the book. Okay, but I'm bringing it in. So everything I discuss in the class is part of your syllabus. Okay. Now, what I was trying to say by talking to you about the equivalent finance concept is I was trying to remind you of what you studied in your FM1, FM2, whatever, okay, whichever one you studied in. This concept, this concept of total assets? Yes? Anybody? Let's ask. Who should we ask? Kushalvi, you remember total assets?
Yes, sir.
Okay. And total assets consists of
Current
what
and
two?
fixed assets.
Current and fixed assets. Okay. And on the liability side, what will be the total coming? What are the two major components?
Current liabilities and non-current liabilities.
And what else? Anything else on the liability side?
Uh,
Equity, liabilities plus equity.
Equity. Correct. Okay.
Shareholders
So
fund.
yeah,
Shareholders fund.
shareholders funds. Okay.
Sir.
So, yeah, shareholders funds. So we should actually maybe do a quick. No, this is not the one. The one. Okay. So here, if we just do a uh, quick revision of your accounting. Some of you may not be clear about accounting, so let's just do a thing. I'll add it later on to your. I'll make this a proper So this notice, this is also coming up in your folder. So this will all be, so if we write here, right, IPM calc or IPM 21 calc. Okay. We want to do a quick recap on the balance sheet just in case some of you are not very familiar. Okay, I hope people don't find this inconvenient because I hate the white background. I always put everything in gray, and I like to have everything in massive font size so that it's easier to see. And I like this one very well. Okay, so let's write this way. I always learned it like this on the left side. So, okay, on the liability side here and on the asset side, okay. Maybe a kind of little bit basic, but I'm still making sure that everybody understands, okay. So as you said, then you have fixed assets, okay. Fixed and, well, actually, then you have current assets, okay, and all those things. Mainly I'm focusing right now. So you have the total assets here, okay. And on the liability side, you have, the way you think about it is net worth. Sorry, come again. I didn't hear you. I couldn't hear you. Sorry, come again. Okay, never mind. Okay, maybe that was just background noise. Okay, so you have net worth. Okay, you can call this net worth. You can call this shareholders funds. Okay, I'm just writing SF. You can call this shareholders funds. You can call this reserves and surplus plus paid up share capital, all that. Okay, so that we just call it net worth. The easy term to use is net worth. It includes everything. It includes paid up share capital, includes reserves and surplus. Okay, so net worth. So, and here you have what is called in outside liabilities. I might have taught you this stuff in lab. I might have used these terms in lab. Okay, when we looked at the Solomon balance sheet, but many of you might have forgotten. Okay, so the broad categorization under liabilities is net worth and outside liabilities. So this is your shareholders funds, okay, and this is all your liabilities. So this will include long-term debt. Okay, this will include short-term debt, which will be basically your all your accounts payable and all those kind of things, or other short-term loans payable. So this all outside, it's called outside because in finance we don't have the sense that we have in law. In finance we say that the shareholders are the owners of the company. Okay, although this is not really strictly correct, but in the world of finance that's how people talk. Okay, the legal term is actually correct that the shareholders are the members of the company. Okay, nobody owns the company because the company is a separate entity. But in finance, this is the language we use. So within finance, you can use it, but you should be conscious always that it's not the right term. The right term is the legal term, where shareholders are referred to as the members of the company. So this is outside because these are liabilities of the company to the people who are not the members of the, not the owners of the company. And this is the liability of the company to the owners of the company, net worth. Okay, so this is what we call equity. You can call it equity, you can call it shareholders funds. So this is broadly we say equity and debt. Okay, equity and debt in terms of, because then when you go into capital markets, you will have equity capital markets and debt capital markets. So we can say broadly equity and debt. Okay, and this can be your balance sheet here. All right. Yeah. Okay. So this is basically the point. Now, what I was connecting to is as we study this concept called leverage multiple, okay, which we are encountered in the context of this margin trading that Brev's mother did, and what is the concept of a margin loan, etc. And that brings us to an important concept called leverage multiple, which is position value divided by equity. So you can get an equivalent corporate finance concept also relating to the realm of corporate finance, relating to the balance sheet. And that would be, now complete this for me, folks. I gave you a hint. Okay, this is total assets, right? Total assets, this is total assets, total liabilities. So we can put a nice color there to show that it's a total. Right? Now these are the totals. Okay. Now, can anyone complete this for me? I want the equivalent finance that relates to an equivalent concept. Equivalent to what? Equivalent to the leverage multiple. What is the leverage multiple? Position value divided by equity. You understood what that means? You buy $100 worth of stock and you put up only $50 of equity and you take a margin loan from Sanchit for $50. Okay, and he'll charge you interest on that. So in this case, we say the leverage multiple is what is being allowed in the US markets. Maximum leverage multiple allowed is 2 because 100 by 50 is 2. Okay, so position value divided by equity. Now, in the equivalent, when we go to the realm of corporate finance, or even let's not forget it, forget corporate finance. Let's call it balance sheet related concept. What is that? If I want to do a leverage multiple for the balance sheet, how will I write it? Same thing I would write.
Total assets minus total liability.
Total assets. Okay, I couldn't hear. Your voice was the lady's voice was there was too much echo. But somebody in the background I heard saying equity. Correct? Total assets by equity. Now you understand. Same thing. Same concepts will be applied here. Okay. Total assets by equity. Total assets are financed by debt also, but it is in this case the equivalent concept is the total assets by equity. Is everyone clear about this? This is also an important concept in finance. Okay, this is some element of sometimes also called leverage ratio in finance. Okay, although leverage ratio might be, you might invert this, you might do equity by total assets. Sometimes it's a measure of leverage. Okay, it's a common measure of leverage in this is not the debt to equity ratio, because for debt to equity ratio you have to use, so suppose you have, this is say 350, okay, and this is say 400, then your assets is, okay, this plus, okay, and then of course yeah, so let's have this a simple kind of balance sheet, and then let's have this here. Suppose the outside liabilities in this case is, let's say, 300. In that case, the net worth will have to become, how should I write the formula? You see the cells, how should I write it? Anybody?
So H2 minus E6.
Yeah, H2 minus
E6.
H2 minus E6. Good to see that you guys can see the thing. Now what I do is I come in, your accountant comes in. Current assets consists of which 3 major items? Current assets.
Inventory, receivables.
Yeah, inventory,
cash, and
receivables, and cash and marketable securities. Okay, let's call it cash. Okay, so accounts receivable, inventory, cash, and marketable. Now your accountant comes in, says you're holding a whole bunch of net books. Nobody's buying net books now. You need to take a hit on the revaluation hit on the net books. So your current assets are now revalued down to 300. See, your net worth drops by $100. Okay, from 450 to 300. So if we undo this, it used to be 450, and we redo, it comes down by 100. So you can see, this is, I think I taught you guys all these concepts in revised it with you during the Solomon case. This is why we say that net worth is a residual concept. Okay, this basic understanding of the balance sheet is very important, because sometimes we find students don't have, even the basics are not clear for some of the students. They have to make everybody come along, and it's not sufficient to just have a few, 3, 4, 5 students who are following and the rest are not following. So everybody has to participate and make sure they upgrade themselves and get clear about all the concepts, at least the basic concepts. Okay, so this is how your system works. So that's why the balance sheet concept, this we are encountering in a trading concept. Okay, but in a balance sheet context, actually it's the same. I'll just show you that it's actually the same. The balance sheet related concept is, again, it's a measure of leverage. Okay, when we look at corporate balance sheet, one measure of leverage. Okay, not the only measure, then one measure of leverage. Okay, so you could have other measures. It's a very common measure of leverage, total assets by equity. Okay, you can call it even the leverage multiple. Sometimes people call it leverage ratio, etc. Right. So I'll show you. It's actually the same thing. Okay. So suppose I had bought $100. If I didn't have, this is like a manufacturing company or something like that. Now, if I had, let's say this is, I'm just trading from home and I have $100 worth of stock. Okay. So in this case, this really goes, I don't really have, let's say I don't have any fixed assets or anything like that, or everything is just for the sake of simplicity. Okay. So this goes to zero, but I have $750 worth of stock. Okay. And I have $750 worth of stock. And again, I've taken 300 loan and I have taken, I have put up $450 for myself. So again, my balance sheet, my trader's balance sheet is going to look like this, because I started out with equity of $450. Then I took a loan of $300 from the broker. Okay. And then I used that total money, the total 750 cash to buy stocks worth of, maybe I bought stocks in Robinhood, which has just had its IPO. So I bought $750 worth of stock. So what is my balance sheet looking like now? No, I don't have any fixed assets. Okay, we're just assuming no fixed assets.
Equal.
Yeah, so 750 is this is actually my stock holdings. Okay, this is your cash, and actually this is like your, you could say this is like your inventory. Given the kind of business you're in, this is like your inventory that you're holding. So it's not really the cash and marketable securities, but now you're a trading business. Your business is to trade in stocks. You're buying and selling stocks. So this is actually your inventory. The $750 worth of stock you bought of Robinhood shares, that's actually your inventory now. Okay, but just think of it that now a trading business can also be, everything can be made into a balance sheet. Okay, so think about it, it's actually the same thing. So when we do a leverage multiple, again, what do we do? What's the leverage multiple here, guys? Let's calculate. Let's go, where should we just put it here to be on this, it should not be dirtying up the balance sheet like this, but let me just make this a little smaller. 90, maybe in 90 we can see it all together. Okay, so if I want to calculate, how should I write the leverage multiple? What should I?
Equity.
Yeah, so total assets here, total assets 750 divided by
450.
450, right? So my leverage multiple is 1.66. Okay, got it? Now it's the same thing. I could have done it for a manufacturing business. My calculation doesn't change. You see that? A very common measure of leverage in manufacturing companies or in any kind of company. In a corporate finance related, corporate finance, because this is the kind of analysis you do in corporate finance, in a corporate finance setting. Corporate finance is just the area of finance that we're talking about, okay, the domain. Okay, like calculus is a domain of, when you're doing calculus, it's a domain of mathematics. Okay, so here what's happening? So this very common measure of leverage, same thing, total assets by equity. So what you've learned now so far is that it's good to see the level of participation also is good, but you have to maintain this, because and don't fall asleep, because you're the one who lose out. Okay, so I could have made it, I could have tried to involve everybody and then little bit of tamasha here and there, but it would just take up time and then we are not covering enough material. Okay, so you have to behave in a mature way, because I'm teaching in this manner, but I require you to behave in a mature way and be very, very aggressive about your learning. Okay, so as I said, always, you have to ask questions. You can ask any question you want, and I will answer your questions endlessly. If necessary, we'll set up tutorial sessions, but please do not fall asleep, because you're the one who's going to lose out. Okay, all right. Okay, so we learned this important concept. Now we try to move on a little bit. Okay, everybody's clear? Any questions on this front? See, from Ben Graham's mother losing money trading stocks, we have learned so much. Okay, so let's move on. Keep an eye on the time. This comes at 2:30. I didn't set a. Let me set a time. Let me set a the alarm. Okay, so I'm never conscious of the time. Alarm clock. Let's set the alarm for 2:30. 2 p.m. Right, we have 41 minutes. All right, so let's go on from here. Okay. These are some stories you can still learn. You don't have to get disinterested because he's talking about US markets, because you'll find some certain things that you can generalize to all markets. And it's always good to know a little bit about economic history. So he's talking about what happened in the US markets many years ago. And this is never useless knowledge. It's always good because it tells you about history is a great subject to study, especially economic history, because pretty much the same kind of mistakes are made year after year, and people can come full circle and make the same kind of mistakes. So if you're aware of economic history, you can detect historical patterns. It's a very good subject, useful subject to study. Okay, you can see. Right now here, this is an important point. Page 12 still. This idea of last line, let's put it this way, page 12. Page 12. What is the idea that, now what are they saying here? From 36 to 56, okay, 20 years, his investment partnership, okay, you can think of it as a fund. Okay, the fund gained this percent and 12.2% for the stock market as a whole. Okay, so what he does is what we call this is basically outperforming. We say it's outperforming the stock market. So let me just write this here, so you learn the correct lingo. Okay, page 7, page 12. One more point. Okay, all this is related to trading on margin. Okay, so we'll have this point as a starting point, and then we covered all this as a as part of relating to. We'll do this later. Now again, page 12. Page 12 star. P12. P12, I'm putting it like that. Actually, I don't need to put it like that. I can actually put it like this. P12 can be straight. Then I can put it here. Okay. Then once again, P12. And what is our star concept? Okay. Relative performance. The concept we are learning is about relative performance. Okay. This is the common way to measure performance of many funds, many types of funds. And so, types known as equity, bond, currency, etc. So what is the general idea in, let me just teach you from a theoretical point of view. So you'll notice in everything I'm trying to teach you I'm teaching you the general theory, okay? Because I want to teach you always general principles which you can apply across multiple asset classes. Okay? If we take, for instance, multiple asset classes, I'll just give you a brief understanding of asset classes. We take this here, and we'll also, this is the thing that I'm using. So I'm going to put the note here also. I'm going to put the link also here, so that then you can actually you can have a look at the link later. But I'm just showing you what I mean by asset classes. So there are different asset classes here. So you can see here when you look at all these are all commodities. Soft commodities, cocoa, cotton, orange juice, coffee. Okay, then these are also called commodities. Okay? You have precious metals; these are also commodities. Okay? But these are actually stock equities. Okay, these are equity indices, but these are equities. Dow Jones, S&P 500, Nasdaq. You can add this is the Nikkei, the Japanese stock market. Okay, all these. Anybody knows which country this represents? The DAX. I already told you the Nikkei was for Japan. I shouldn't have told you. I should have asked you. Okay, so the DAX is for the German stock market. Okay, so these are all equities. These are different asset classes. These are equities, a different asset class. These are all commodities. Okay, crude oil. These are all commodities. These are all, whole thing falls under commodities. And later on, I think we'll see currencies here. Right at the bottom, different asset classes. Okay. Currencies are different asset class. Commodities are a different asset class. And equities, and then you have debt. Okay. So the major asset classes will be me not write the word bond. Let me write the word debt. Debt is a more general term. Okay? Equity, debt, currency, and commodity. Okay, four major asset classes. You have a fifth one, which is real estate, but let's not get into that right now. So all the type, when I say types of funds, the funds in different asset classes. So right now we're talking, in Graham's case, we're talking about an equity fund. Okay, so he's an equity fund. So he's investing in equities, and he's talking about relative performance. And so the concept is relative performance. So basically, performance of many types of funds. Okay, so what is relative? Let me just explain to you. Okay, here. Performance, relative performance. What is relative performance? Obviously, you can understand relative performance. It has something like the sense of the, what would be the other word? What would be the opposite in this concept? In this case, can anyone tell me what would be the opposite of relative performance? So, like if I say girls, you can say boys, opposite boys. But in terms of, if I say relative performance, what would you say as the opposite of that? Anybody?
Unrelated performance.
No, not unrelated performance. But it's okay. Don't get put off by the fact that I'm laughing at you. I'm just finding it.
Absolute performance.
Absolute performance. Very good. Actually, it should be absolute. Okay, absolute performance, right? Okay. Relative performance versus absolute performance. Absolute performance. We'll figure out what it means. Okay, performance. Relative performance. Let's understand first relative performance. Relative performance is. I just want to make sure I give you the, I want to write down some of the basic elements of the definition so that you learn the correct concept. Okay, it's not meant for you to mug up. Okay, the reason I'm writing like this is not because you should mug it up, but I want you to understand the key concepts, like the way I define trading on margin. Okay, this is basically why did I write all this? Because this is the key to the whole concept. It's not like, it should not be explained as, oh, you borrow some money and buy some extra stock more than what you could have bought with your equity. No, that's too specific to equities. If I write it like this, you understand how it is a very general definition, that I'm not putting up equity in the general sense of the balance sheet like this. Because any set of positions, okay, if Mayank is running a fund, Mayank is carrying some stock positions, we can tally up all his stock positions, and we can just tally the total value of his stock positions, and then we can find how much equity he has put up. Let's say he's trading within the settlement, so he has taken some borrowings as well. We can find out what the thing. So this can be applied anywhere. Okay? So this is a very general definition. So always remember this. Okay, the classical way of learning is to learn according to general principles. So we must always learn the definitions and the concepts in as general a manner as possible, and then you can apply it in specific cases. But you should also always understand that this is the general concept that I'm applying. It just so happens that I'm applying it in an equity context right now. Okay, so relative performance also, the reason we are going to the discussion of relative performance is because we have been given an example from the equity markets. Okay, this is how you measure the performance of fund managers. Okay, we say Graham was a great fund manager. Why? Because his investment partnership, 36 to 56, gained this much versus this much for the stock market as a whole. Okay, so you could read this, but this is very specific. The general way you have to understand it is they're talking about relative performance, not about absolute performance. The absolute performance here is this one. This is the absolute performance. But when you say relative performance, or you can say in this case relative, you can say relative performance is 14.7 minus 12.2. So it is plus this element, okay, for 2.5 plus 2.5. Okay, so we say it is an outperformance. Okay, so that's the term we use. I'm going to write it here. Okay, so relative performance here is we can write this here itself. Relative performance is, in the case of Graham, because we are going to page 12. Okay, do I need to write last line here? You guys will understand, right? Because this is meant for people who have attended the class. It's not meant as a note for people who are for random people coming in, right? So it's meant for, I think I don't need to write last line because you know it's on page 9. Okay. All right. So here you have relative performance versus absolute performance. Let's bring it a little closer. Absolute performance is plus 14 point. Plus 14.7. I'm going to go on to the next one. I'm not writing percentage, okay? I need to make this thing smaller. Okay. And the relative performance is 14.7 minus 12.2, which is 2.5. Okay. Plus 2.5. Right. Okay. Is this clear to everybody now? Okay, this is what is meant by absolute performance. So, well, Sushant did very well. He made 14.7%. But if the index itself is down, the index went up 35%, and Sushant did 14%, then you see that he has actually not done very well. Okay? So this is the kind of concept that you have. So it's a very important concept in investing, relative performance. So what is the general formula or the general structure of relative performance? Performance of any fund. In this case, we will look at any fund, okay, compared to performance. Again, I should be writing the performance, okay, better performance of
Benchmark.
and yeah, benchmark, yeah, of a benchmark. And what is a benchmark? Again, you have used a technical term. A benchmark is basically an index, okay.
12.2.
Sorry, come again.
12.2, sir. Benchmark.
Yeah, benchmark performance is 12.2, but we are trying to define a general concept here so that we can apply it elsewhere also. You're right, the benchmark performance is 12.2. Okay, so we are just writing the general concept because later on you can apply this even for a currency fund. Okay, if you manage a currency fund, what will happen? Maybe your currency fund is up 14%, but or let's take a different number. Suppose your currency fund is up 23%, your fund. Okay, now suppose I make an index comprising all these different currencies. On average, if I had invested equal amounts in all these currencies, Kiwi, Aussie, Swiss franc, Canadian dollars, British pound, yen, euros. If I had invested a little bit in each of these currencies, on average, what would be the total? That's like an index. That becomes like an index. Okay, it's an index is like an average. That becomes like an index. Now that index, maybe that index is up 75%, but your fund is only up 25 or 35%. So that means you have not done well. Okay. So in general, we have to learn the concept in general terms. You see what I'm trying to do by pushing you into always thinking about concepts in general terms so that you can apply it across the board in any asset class. Okay. Relative performance, so we have to define relative performance in a very general way so that we are able to apply it in any kind of context. Okay. Performance of any fund compared to performance of a benchmark. Yes, good to put in this word in benchmark. What is the benchmark? We have to define benchmark also. An index or average, okay, represents okay, so you get an index or average which represents a broad category to which that fund belongs. Okay, that's why, for instance, when because this partnership was trading in equities. Okay, so that's why they took the equity index. All right, if it was trading in bonds, they would take a bond index. Right. Remember, I gave you the example also of currencies. So somebody is managing a currency fund, makes 35% in their currency fund, but then we have an index for the currencies, which is kind of like an average of all the different currencies. What would happen if you invested equal amounts in all the different currencies? And then you have an average. We look at the performance of the currency index, and then we compare the performance of the currency fund to the currency index. Okay, and then we say that, okay, this is the relative performance. So notice, very important, always learn the definitions in a very general way. That's a classical way of learning. Okay. So performance of any fund compared to the performance of a benchmark. And what is a benchmark? An index or average which represents the broad category to which that fund belongs. Okay. So you can do all this. So you can, this kind of concept you can have in everything. You can, in cricket, you can look at a batsman, how many on average, how many balls he takes to score a century. Then you can do that calculation for all the average of all the players, test players, and compare his performance to the average. That's also relative performance. Okay, so that's the concept. So you have to understand the concept in a very general way. This is the classical way of learning. Always try to do it this way. Okay, so let's go on here. Any questions, folks, at this point? Okay, let me try and get some kind of this. Okay, let me just show you this charting system here. It's a very good charting system. You guys should all set up your own log. It's free. Okay, so let me, in the context of relative performance, let me do that. This is the charting system. You need to set it up. You need to basically create your own login. Okay, it's free. A bit of a pain because it'll keep on throwing out ads. And so in this case, this is dollar versus rupee. You can do pretty much everything here. You can get currencies, you can get commodities, you can get equities. Now suppose, let me just look at some, let me see if we have, let's see, growth fund or something like that. Do we have any funds? No, we don't really have funds. Okay, let's look at this. This is a new company actually, HDFC Asset Management. Okay, so let's look at this. So we are going to, what we are going to do is, we are going to assume that HDFC Asset Management, which is actually the asset management company or the AMC, we're going to assume that HDFC Asset Management is actually the performance of a fund. Okay, so this stock is actually like a fund and the value of the fund and what is happening to the fund. Okay, so first the fund is going up in value, then it is coming down in value. You understand what I'm doing? Now I'm going to show you how to do, you can go here, you can practice all this yourself. Compare it. Compare it to what now? Okay, somebody wants to tell me what should be the benchmark here. This is the fund. HDFC Asset Management is the fund. What is the benchmark?
Index in which this is
The
available.
Sensex.
Yeah, Sensex. You want to use the Sensex? Okay, Sensex on Nifty. Okay, sure. Should we can have? Let's see if we have a broader index. BSE 200. Do we have BSE 200? No, we only have. The BSE is actually the. Okay, so let's take the Sensex as one of the indices. Okay. Right. Now you can see.
NSE 500, so we can take it.
Yeah, we could have taken NSE 500 also. But anyway, we just, that we'll figure out. Maybe they don't have the tickers for those. But we have the Sensex, right? So we can see the difference in performance. Unfortunately, I've done something to my, it's about 86%. And this is over this period, okay? Over this period, if you can take 1 year also, it becomes a little easier to see. Now you see the real outperformance. These guys are actually down, okay? These guys, the fund is actually down 14%, whereas you can change the time period here, okay? And you can see that this is up about 45%. Okay, so this is what is meant by relative performance. So it's a very common thing to do. And of course, you have to remember that this has to be the represents, this is important. Okay? You do not take an unrelated index. So you do not take the performance of a stock fund and where is my here. So you do not take this, let's assume that this is a stock fund only. And you do not compare it to, in this case, this is a stock fund, okay? So if I wipe this out and I do remove, okay, and I compare this very messy charting, charts, okay. Now suppose I compare this to USDX. You know what USDX is? I hope they have a chat. I hope they have, they don't have the, okay, they don't have that here. Anyway, USDX is a bond index actually. What do I have? Yeah, okay. So if I compare it to MSCI Japan index. Okay. Now this is not appropriate because my benchmark, my HDFC Asset Management is an Indian equity fund. This fund invests in Indian equities. And what am I comparing it to? The Japanese index. There's no connection as such. I mean, they're both equities, but it is not really the index or the benchmark must be representative of the category to which this belongs. Got my point? That's why this word is very important. Representative benchmark. You have to use a representative benchmark, not just any benchmark. Okay. So this is another term that we learned: relative performance. Okay. What he did. Okay, let's try to come. I hope that part was clear. Any questions? You have to. I'm not going to keep on asking any questions. I will try, but you have to warm up to it, and you have to keep on asking questions yourself. Okay. Be proactive about it, and that's how we can. That way we can increase your learning. Because every time I go, okay, there you got your break. 1 minute. Let me stop this thing first. Okay. All right. So your class is done. So what I will do is now, yeah. So do we have to do? Is there anything to be done on Creatrix? I don't think I have to do anything. No, class is done, so that's fine. So everybody can leave, and whoever has a question, the class is dismissed. Okay. So you can leave, and then if anybody has a question, you can stay back, and I'll answer your questions. Okay. The rest of you can leave. So who has anybody? Yeah. I hope I didn't miss any administrative matter. We took attendance. We did everything. Huh? So if I miss any stuff, you please remind me, okay? Because I'm very forgetful. So you have to remind me if I miss something important, like recording, very important. Starting the recording. You guys have to remind me. Okay. Okay. Anybody has any question? The rest of you can leave.
Thank you, sir.
Okay. Welcome.
Thank you, sir.
Thank you,
Welcome.
sir.
Thank you, sir.
Yeah. Okay. Welcome.
Thank you, sir.
Okay, so no questions. Well, just I give it a few minutes and then I'll end the class. Yeah, Aditya has a question.
Yes, sir. Actually, I was thinking, sir, how to go through the notes, because I have missed a lot of things in between because of the speed, and I was not able to understand much of the things because it was new for me. So I was thinking if I can have a better note so that I can just go through them and I can revise the whole thing.
No, see, you have two resources, right? I mean, you have three resources. You have the textbook which we are following, right?
Okay.
So what you can do is you open the textbook. Now, I have not yet stopped the recording. Once I stop the recording will appear in the Teams chat. You know how to navigate the Teams chat?
Yes, sir. So I'm even recording the class by my cell phone.
Okay, that's fine. So you have three things. You have the textbook, you have the recording, and then you have the notes that I'm making here. Okay. So that's basically that's a lot of resources. No. So what I would suggest you do is that you revise the class yourself. You redo the class on your own, right?
Okay, sir.
Yeah, and then you redo the class, and then you see if you generate some questions, then you come back to me.
Sure, sir. Sure.
Yeah, so it's not like today's question you have to finish by today itself. Then tomorrow I don't let you ask questions over the first class. You can ask questions at any time. So we will.
Sure,
what is your situation? After this, you guys have another class in 15 minutes.
Sir, we have. I have a class, sir.
Okay, so another 15 minutes, you will have another class. Yeah.
Yes.
So, which means we can't do. We can't cover too much because you'll have to hit into the next class. So whatever we can do, we'll do day by day after the class. Right.
Sure, sir.
So you revise. Revision is very important, folks. Please remember, only those who are left in the class. I'm finding even your seniors also, and some of your batchmates also, who have tested. You're forgetting some stuff because you're not revising enough. You have to revise. Okay? Otherwise, it will not get into your brain. It has to get permanently embedded in your brain. All right. Okay, Aditya, you're clear now.
Yes, sir, I'm clear.
Okay, redo it, revise it, and then you can come back to me when you have questions.
Sure, sir. Thank you.
You are allowed to ask any number of questions, and forever you can ask questions forever, and there will be that will be answered. Okay. So
Thank you, sir.
okay, take care. Bye. Yeah. Okay. Yes, Isha.
So you were showing us a website where there was a list of commodities.
Yeah. 1 minute.
Okay. So here I wanted to know that this orange juice. Can you please lower it down?
Soft.
Yeah.
It's in soft. Yeah. Orange juice. Yeah.
So a bit down where relative performance was given.
Where? Oh, okay. Okay. This
This
one.
one.
Okay. Yeah.
This orange juice ki jo, the relative performance which is given, it is among the only category where this orange juice belongs.
No, no. I didn't understand your question.
So this orange juice was the part of the socks.
Yeah.
So this relative performance, which is 3.17, it is to the performance of the socks, complete socks, other
No, no,
commodities.
no, no, no. It's actually relative to the. This is not really that kind of relative performance which we are talking about here. Slightly different concept. The relative performance we are talking about here is with respect to the uh, performance measurement of investment funds. Okay, so that's a different kind of context. There we are using a benchmark. Here, this relative performance is actually this word is used in a more casual way. Okay, here if you notice, it's up. This if you notice here, if I blow it up more, you'll see it better. You see that orange juice is up 3.17%. This is up from the last close. Okay, so this is taken. These kind of chart displays when they say the last 3.17%, they are from the last close, unless last closing price. Unless you're looking at something like this. Okay. Does that answer your question for this context? You understand
Yes.
now? This
Yes.
3.17 you see. Let's see something else which is very close to zero, which is cotton, which is it's actually just below zero. You'll see cotton will have gone somewhere just below zero. Zero, where is zero?
Minus 0.11.
Yeah, you see that now 0.11. Why is it 0.11? This should be something else. What did we see here? So there is some problem here because this doesn't round to 11. So I don't know where they are, what they are referring to. Cocoa 2.47, is it 2.47? I don't know how they've done it. Okay, maybe they have taken this as relative performance. They have taken it as uh, they have taken some kind of benchmark against which they have, but it's not clear exactly what they have done. But it's a one-day performance basically. But it's 3.17 is matching here, and coffee minus 0.77. What is coffee?
Minus 0.63.
Yeah, so there's something else that they're using as a benchmark. Okay. Yeah, yeah. Okay. So yeah, something else is being used, but anyway, it's the same concept here. But sometimes what they do is this 3.17 here is actually the from the last close, and this one day relative performance, the period is always relevant. Remember, see here, uh, this part, page 12. When you do relative performance measurement, it's always over some period. Notice here there is a period 36, 56. Okay. There's always a period. Just like when you did your beta calculations, if you remember, in your FM1, FM2, right? You would get a different beta if you did it, if you took like 10 years of data versus if you took 20 years of data versus if you took 5 years of data. You would get different beta numbers. You remember that?
Yes, sir.
Yeah, so there is always a period involved that is there. In this relative performance also, there is a period that has to be specified. So I don't know what exactly they have used, but obviously, yeah, they are using the similar kind of concept. I thought initially that they were doing it against the previous close, but ethanol, USD, ethanol, whereas ethanol, the energy, ethanol is an energy, price is also quite close to zero. Anyway, so I'll show you something else, okay, which is here, what I was the reason I was mentioning one day. Like if you go to, this is actually like a heat map. Okay, this is done. This is called a heat map. Okay, so you see those are very sharply down. Those are shown in deep red. So you see the color. They are using the color as giving you some meaningful information. So the ones which are up this much, okay, the ones which are up sharply up, they are in big green numbers, green background. So the color is also meaningful here. You see, so it's a richer way. It's like a futures heat map, but I'll give you a better idea of a heat map, which is here. Now look at this. Now this is actually another fascinating way to look at stocks. Now this is a heat map of the stock market. Maybe I should make it a little smaller. Okay? Let's make it 90. So here also, straight away it tells you, the colors tell you what happened. Okay? So you can see Apple, Microsoft, Amazon, no big deal actually. Not much movement. But Facebook, big movement. That's why Facebook is in green. Okay? And then the size of the box shows you the capitalization of the company in that sector. So like under software, you have infrastructure. So there you have various software companies, but out of those software companies, you see the Microsoft Square is the biggest. So you see how much information is available in these charts. This is a heat map. Okay, so the size of the Microsoft Square or the Microsoft rectangle is representing the percentage market cap among all these stocks. You got my point here. Okay, that's why these are these are very large cap companies: Google, Amazon, Microsoft, Apple, Facebook. Okay, uh, that's why these companies, their boxes are very big. You see
So
that?
is this kind of chart available for the Indian stock markets?
That I don't know actually. You have to check if they have done it. It's just a matter of some software company doing it. It's not a big deal. But the point I was emphasizing is that this is another reason why you should study finance always from a global perspective. The point is that you know now what is a heat map. You know what are the elements of a heat map. That you use coloring to show the extent of the up or down movement. You use shades of colors, and then you use the size of the box. Apple is in a category by itself. It's the consumer electronics. There's nothing else. Nothing else in that category. There's only Apple. So you use the size of the box to show the relative size of the company in that sector, and they use the colors to show the up or down movement, color shades. Okay, and then not only that. Now that's what I was talking about earlier. I'll just come to your point earlier. But I'll just tell you one more thing about it. Now the same thing. Now you notice these numbers will change. Okay. This is just straight out performance is up or down from the last close. Okay. Now you see here, uh, let's say now we change 1 day, right? So let's change it to 1 year. You see, the whole thing changes. Okay,
Yes.
it gives you a clue also here. 90% means this much. Okay. Yearly stock performance in percentage. Okay, this tells you this much. Okay, so you can see the color coding. Okay, now, so what you have learned is, you got some other tricks also you can experiment with. I've given you the link so you guys can play around. Okay, now the point is you have learned what is meant by a heat map. Okay, how you show the entire performance of a particular asset class in a heat map. This case is equities. The asset class known as equities, you're showing it here. Okay, and how you can play around, what are the different permutations and all that. Now, you can always do this for the Indian markets. You just need the data. Okay, but that's not a very substantive conceptual learning as such. You understand what I'm saying?
Yes, sir.
That you have understood what is meant by a heat map. You understood how to interpret a heat map. Now, if you don't have an Indian heat map, that's because no software company has bothered to put in the effort to take the data from Indian market. The data is there. Obviously, it can be done. Okay, and maybe it's there also. It's just that I don't know about it. Okay, so but you understand that this is sometimes people say, why aren't you teaching Indian markets? If you teach Indian markets, then half the things in finance you will not learn. Okay, that's not the way to learn about This is like saying that, why don't you set up your tech company in Calcutta? Why not, instead of going to Silicon Valley, why don't you set up your tech? Why does everybody go to Silicon Valley to set up their companies? Because that's where the action is. Okay, that's where that's where all the Western class stuff is happening, right? So that's why you have to learn from the biggest market. So now you've learned the concept of a heat map. You can always apply it. It's a matter of having the data and putting it through writing a program to capture that data and show this. But what is more important is actually the concept of a heat map and knowing how to interpret a heat map and knowing what a heat map is. Right? You get my point?
Yes, sir.
So the concepts that are being taught, the concepts are always the same. The concepts do not change when you come to Indian markets. Now the companies will change. Instead of Google, you'll have HCL Tech. Okay. So the companies will change, but the way you analyze the companies, 99% of it doesn't change. Maybe actually nothing changes actually, because the principles you follow are the same. The questions you will ask are the same. The fundamental questions you will ask are the same. So nothing changes. So this way that most Indian business schools, they teach finance mostly for an Indian market focus, which is not really correct, because then you don't learn a lot of things. So it's like studying technology by saying that we have this sector in Calcutta, we have this area called Salt Lake City where we have most of our tech companies. So I'm going to study technology, but I'm only going to stay in Calcutta and study the Salt Lake City sector. So that's not how you study a subject. So that's the thing. So is this clear now?
Yes, sir.
Okay. Right. So anyone else? Anything else? Any other question? Good. At least we had I was very worried about this section. I was very worried about the technical aspects of the session because the technology aspects. Something might not work. No, video may not work. And we need video actually. We just need audio and screen sharing. That's the important part. Okay. So somewhere I'll go and stop the recording. Is that okay? Anybody else? Any questions? Tapur, Ria, whoever's there. Are we done? Yeah. Okay. So I'll shut it. Isha, no more questions, right?
Yes, sir. No more questions.
Okay. So I'll stop it then. I'll see you guys on Saturday.
Thank you, sir.
Okay. Take care. If there's any problem with the recording or something, if it doesn't show up or anything, let me know. So I'll chase it. If there's any problem somewhere, anywhere, let me know, because otherwise, if people don't tell me, how will I know?
Sure, right? Sir, we'll let you know.
Yeah. Okay. Thanks. Take care. Bye.
Thank you, sir.